G'day, Lindsay here. I'm super impressed that you're willing to look outside the box and think abroader for good, solid investment options. US property can certainly be a fantastic addition to your property portfolio if done correctly. Now, what I'd love to do is go through a few of the points with you and show you the fantastic opportunity that the US property market can show you. So hopefully by now you've downloaded probably our guide, US Property Made Simple. So have a look through that. And if you haven't, what I want to do is I'll run through some of the points and the benefits of the US market. Now, I guess one of the first things that we talk about and one of the biggest advantages the US market has got to be affordability. With local markets so hot right now and a lot of areas almost impossible to purchase real estate, there's never been a better time to look at affordable markets for investing. The US market allows you, the Midwest of the US allows you the opportunity to purchase properties for as little as 50,000 US dollars. And that's insane. This is good, solid, quality properties giving good, solid rental returns. You won't see that in too many other locations. And what this does is this leads me on to point number 2, which is cash flow. So cash flow is king. And I'm sure people have said that to you before. The properties, because of their value and their affordability, the cash flow that can generate from the rental market on these properties is second to none. Most of the properties will easily bring you 10 to 12% net returns after all costs, with choice deals realising better than 15%. In current local markets, we're lucky to get a quarter of that. And here where we are, if you can get anything positive, you've done really, really well. So point number 3, and one of the other reasons that the US market can be such a good option for investment is, and a lot of financial advisors will tell you, diversification is really good. So it's great to have properties in your own market if you can, but it's also good to diversify your portfolio. So if your market starts to struggle, other markets could really still be booming. It's something that goes hand in hand with most good property investment strategies. High leverage properties with good growth are excellent, but high cash flow properties are fantastic. So the other thing, I guess, and a lot of people sort of think for point number 4, that the US market is a very risky market, which in actual fact, these are very low risk investments. But the majority of the US market is very, very stable, less exposure to market forces, lower costs to get into the market, allows for a much lower risk profile. Ensuring that all your properties are insured, you can get rental insurance and tenant insurance if you need to. If property prices drop 5 to 10% in a market in a year, that can mean a loss of only $4,000 to $5,000, but you still have a very, very high cash flowing property. Similar price drops in our local market could slash hundreds of thousands of dollars from the price of properties, and investors can suddenly be struggling to make mortgage payments, particularly on negatively geared properties. Now, the other thing is, a lot of these properties, you can buy these properties for cash, so you don't have to worry about repayments and finances and mortgages and this sort of thing if the property prices do drop on you. If you lose tenants, you can replace tenants. So, you know, the safety net here is actually quite safe and much lower risk investment than a lot of people realise. And point number 5, we were just talking about the finance payments. This allows you to get a debt-free portfolio. You literally can, over the next 3 to 5 years, look at putting together 5 to 10 investment properties, each earning for you around about 10,000 US dollars a year net in returns. So you could be looking at a $50,000 to $100,000 a year passive cash flow, all debt-free. You can buy these properties for cash. This can be very important, particularly as people are looking to set up retirement. Serviceability on loans can become a huge hurdle. That will often stops people from retiring from full-time incomes, full-time jobs, things like that. So we've had many investors investing simply $200,000 to $300,000 in the US, giving them that passive income of over $50,000 a year debt-free. And the last point, and I think this is probably the most important and the bit where we can really help, there's no experience needed. You don't have to be a seasoned property investor to get into the US market. We can take all the guesswork and all the fear away from investing in this lucrative market. If you don't have time, that's no worries. We can do the investing for you, ensuring that you can find the right deals, and we will follow our 5-step buy and hold process. And this is firstly ensuring that all the properties are at or under market value. So you're not paying more than market value for these properties. In fact, if you can get them under market value, you can build in a little bit of equity right from the start. The second point, and very important point, is they need to be tenanted at closing from day one. You don't want to be purchasing for a rental property. You don't want vacant properties. You don't want to have to worry about trying to find tenants to get into those properties over that period of time, and having a vacant property with very expensive vacant house insurance for that period of time. Third, the properties have to have a property manager in place that's managing your rental for you. You don't want the headaches of doing this. You have a licensed and an experienced professional doing this for you right from the start of your purchase. Number 4 is you need to make sure that these properties are fully renovated. You want to make sure that they're going to give you low maintenance for the next 3 to 5 years. You don't want headaches where you need to replace a roof, or you need to fix foundation issues, or you need to replace large furnaces, heating systems, cooling systems, things like this in these properties. Fully renovated properties, again, gives you headache-free investing. Number 5, all these properties have to have their permits, licenses, and or certificates of occupancy as per the city or council regulations. So this is another very important one, because a lot of people get caught in the US buying cheap rental properties, and I use the term cheap. They buy cheap rental properties, but these properties do not have certificates of occupancy. They do not have rental permits. They've not had a renovation done recently. You're getting your $1,200, $1,500 a month rent, but all of a sudden you find you need to spend $10,000 on a new roof, or you need to spend $10,000 fixing some items in the property. Or worse still, you get a tap on the shoulder from the city or the council, and they give you a violation for having a property rented without a permit. And next thing you know, you've got inspectors there giving you a list a mile long of things that need to be repaired on the property. So these are 5 points that you need to make sure that all of the properties that you purchase follow to give you that hassle-free, headache-free investing. And we follow through all of those properties. This ensures that you can get high returns on your investment while you can focus on your businesses or your income here and not have to worry about your investment portfolio and what it's doing. The properties will come complete with property managers. They'll manage all the issues for you. All you have to do is literally just simply collect the profits. So by leveraging off our experience within the US market for more than 7 years, tens of thousands of dollars spent in the trenches, learning markets, dozens of trips to the US, hundreds of deals done over the past few years, I can help take the guesswork for you out of your US investing. Now, we target specific growth corridors within a few regions, and we look at particular properties that fit one of 2 models. First of all is your general single family residence. Now, this is the most popular style of property. It's a 2 to 4 bedroom home with 1 or 2 bathrooms. Oftentimes in the US, they love their basements and garages. These properties are fully renovated, as we said, tenanted, giving you high cash flow, low maintenance, literally almost hands-free investments. Now, while these are slightly lower in returns, still well above that 10%, they are by far the most common and the easiest to manage and the most passive style of rental. But there is another one, and the other option is what we call multi-family residences. Now, these are a little different. There's not a lot of markets that have similar sort of properties to this, but these are mostly what we would call duplex or triplex properties, a house having 2 or 3 units inside the property. So each unit would consist of 1 to possibly maybe 3 bedrooms, a kitchen and a bathroom. It can vary from unit to unit. Duplexes sometimes being maybe a 3-bedroom unit downstairs and maybe a 1-bedroom unit upstairs, or a triplex could be a 3-bedroom unit downstairs, 2 1-bedroom unit upstairs, giving you the 3 units. Again, you're looking at targeting B and C class neighbourhoods, giving the best rental return based on purchase costs without significant increase of risk to the investment. Returns for multifamily can be a little higher than their single family cousins. I would be expecting you'd be looking anywhere from sort of 12% upwards, possibly 15% or higher is certainly not uncommon for these sort of properties. Being a slightly more hands-on strategy with 2 or more tenants in the one property, the returns certainly do make up for this though, but the property manager is there to handle any of the headaches for you. Now, while these are not the only types of properties that we look for, sometimes commercial and apartments can be very good options. These are certainly the most common and relatively the best results for passive investing. All right. Some of the areas we focus on at the moment, actually, we're doing a lot of work up in the Michigan area. There's a lot of growth up in that area. There's some really good areas in Grand Rapids, in Michigan, for instance, which has now got what they call their medical mile. There's a lot of medical supplies and that sort of thing going in there. Detroit itself has now got a real resurgence with the big three, the car industry, Ford, Chrysler, and GM. Chrysler just building a brand new, huge factory just outside of downtown Detroit. Going to be employing over 12,000 people. It'll be open by the end of this year. So there's a lot of infrastructure growth in there. Amazon are putting in a regional office in Lansing, just outside of Detroit. Quicken Loans has their head office now in Detroit. There's a lot of areas they're branching out in, also outside of the automotive industry. So it's been very important. Other areas we look at is Texas, Austin, San Antonio, those sort of areas. The Texas market is underpinned by the oil industry, and the oil industry is a very solid, very secure industry. Florida, Tampa Bay in Florida is another very good one. Pace, Pensacola regions in Florida are also very good. So there's quite a number of stable, secure markets that you can diversify your portfolio into. Unsure of where to start? Well, look, as a buy and hold investor, we would sit down with you. We'd help you determine your investment strategy. First and foremost, target the regions and the types of properties that you're looking for. This maps out a very, very clear picture for you of exactly the types of properties you're looking for and exactly the returns you can expect. Now, I understand you won't have the time to do the legwork or the due diligence, and that's fine because that's what we do for you. The properties are already fully screened and researched. They're already fully renovated to high standard by our contract teams. They come complete with all permits, licenses, certifications required for rental. Tenanted from day one, so there's no downtime while you're trying to source tenants. They're at or under the estimated market value, so you're not losing equity or waiting for markets to rise to build into some equity. All complete with proven, trusted property managers to take away the headaches and manage that property for you. The property choice is yours, but the work is ours. The investment. Lindsay, how much does this all cost me, you're saying? Well, this is an easy question. And for you, the investment is none. And that's correct. Other than the purchase price of the property, there's no additional costs, fees, or charges payable by you for any of the properties that we provide. So how's this possible, you say? Okay, I'll be totally transparent. The properties we offer are properties that we own or properties that we've been paid to source and renovate on behalf of clients. So that way we are intimately involved with every single property, and all of our fees are covered by the sale price that you see, or we've already been paid by the owner to renovate and sell the property. This means there's no surprises for you as the buyer. We can stand by our work, and we know that these are good, solid deals rather than trying to source you unknown properties. The prices that you see and is the price you pay, the settlement costs and the taxes you would pay as per a normal property sale, and that's it. So as a process, look, the best thing to do, give us a call. There'll be a button down here. You can contact us to have a chat. You'd only need to put down a deposit for the properties, what they call earnest money in the US, around about $2,500 to secure the property. Then you can pick whichever property you like, and we can assign that deposit to it. Take as long as you like to choose. We'll just keep sending offers, properties through to you until you see one that you really like and that resonates well with you. Properties are sent out in feasibility sheets. All profits shown are rental cash flow only. We don't build into growth. We don't build in any form of depreciation on the properties. It is pure rental cash flow. You can see that. If you get capital growth on the properties, that is an absolute win. We're happy to talk through the feasibilities with you to ensure that you're comfortable with the property that you're buying, because after all, this is a big decision. So once you've selected, the earnest money is applied to that property. The US title company will which is like a property solicitor or a conveyancer, will begin drafting up the paperwork, and then you can settle and close on the property. Once the property's closed, you basically sit back and earn your rent checks. And that's how it works. All the properties are off market. You're not fighting against other bidders, worried about backup offers. If we offer it to you, it is for you only. You've got 24 to 48 hours to review. The property settles and you begin cash flowing from day one. So have a look, give us a call, and we'll chat through it.